So yesterday we started seeing a little bit of volatility. This is after I posted the video. People were telling me in the comment section the price had went down a little bit. And so then I looked at the charts, and of course the DXY was, the dollar was strong again. And I'm like, well, this makes perfect sense. It's not necessarily just about sell-offs, but the dollar exerts pressure on all the different markets. So not only did XRP's price go down at that time, because I see now that Bitcoin's price has gone back up just a little bit. We'll see how long that lasts. And also I'm keeping an eye on Bitcoin. Bitcoin had a little bit of problems. We'll get to an article about that a little bit later. But technical problems, but commodities were also down at the time. A lot of almost all of the cryptos were red at the time. Yeah, but the dollar exerts that pressure. Look, there's so much going on to monitor that affects the price action of these things. It can get quite complicated, but between dollar pressure, which is major, and of course people taking profits as well, that's going to happen. That's going to happen. This is a money game. People are going to scrape some off the top. You know, different markets affect each other. There's a sort of an in and outflow, that there's a rhythm, and this is nothing new at all. Doesn't concern me one bit. That's just my humble opinion. I'm not asking you to agree with me. I'm not asking you to follow me. I'm not one of those people. I merely share with you some of my thoughts and some of this news and research that I come across. But there is a lot going on. People are going to need capital as well. When you're talking about taking profit, they're not going to hold. There's no way that they can. There's people that are losing their houses. There's people that they're losing their apartments. They can't pay for their apartments. They need food. I'm reading constant complaints about, inflationary prices on, food and energy as well. Of course, when it comes to, a consumer price index, they don't include food and energy, which is like the most important thing. So the people are still suffering. I'm seeing lots of reports on that. So they're going to take profit on anything that they can to get by. The people are hurting. And it's like a lot of people don't want to acknowledge that. It's like this ostrich head in the sand type of activity. But you have to understand that in order to know why things are going to be a little bit more vicious as time goes on, as people's survival is on the line. So no, that doesn't. And you know what? When I think last I saw, I haven't been checking the charts frequently today, but last I saw XRP, I think was at like 69 cents. I didn't think that was that bad. I didn't think that was that bad, but maybe I missaw the price. I don't know. I'm not really concerned too much with these lower prices, but I try to think with, I try to look at the microcosm and the macrocosm. So the macrocosm for me is a higher price. I have never put my price out there as much higher. It blow people's minds. But it's a higher price for XRP. That comes later. I don't have to worry about that right now. I'm just waiting on catalysts to come into effect. And I monitor when those catalysts may come into effect, so I know what's going to happen and when. And I enjoy it very much doing that. And then the microcosm are these smaller price actions, right? They're like the walks before the run, the steps before the run, before the sprint, right? The build up. I monitor that as well, which I enjoy that a little bit. So, I wanted to get to 80 cents first. I want to see that. Boom. Okay. 80 cents. I know we hit 85 before. I'm talking about right now. $1, break past that $1. Now I'm like, okay, well, now we're getting somewhere, and look at the sustainability of that, holding those prices, holding above 80 cents, the price holding above 80 cents. The price holding above $1. It tells me a lot. When I watch the price action from time to time, I'm looking for any indication of what might be going on behind the scenes. Like, why is it holding at 75 cents when it does? Why is it holding at $1? Is that, what are the reasonings? What happened in the last 2-3 months or weeks, or, what may be going on? Is there a partnership where they're testing something? I'm running all these thoughts. I'm running all of these thoughts. I'm going, so I'm trying to keep in, my mind aware, 360 degrees of awareness, not 180. 180 is the macro, 180 the micro. And then I can sort of get an idea of where everything is heading, because I do have my timelines, and my timelines are very adjustable, very adjustable. So anyway, so now this first article here has a lot to tie in with that. This is from the cryptobasic.com, and it's titled Key price target, XRP must secure close above 75 cents. So that's like similar to how I think. I'm like, okay, well, listen, if it closes above 75, if it holds around those levels, like right now it's holding much higher than where it was before. I'm okay with that. I'm okay with that. This is personally, I'm not asking you or someone out there to be okay with it. No, I'm not here to convince you and control your mind. And no, I want you to be free and have your own thoughts, and I will hope people want that for me as well. But I'm just saying how I feel. But I'm okay with that. I'm like, okay, well, this is making some progress. We're not at 47 cents. We're not at 54 cents. Like there's some progress being made, and I'm not one to how do I say, be unappreciative of that or take that for granted when we were lower before. We could still be there suffering. No, but there's a buildup now. I'm very grateful for that. Okay, we're making some progress. Things are going up a little bit. Good. And then all the partnerships that have been happening as well. That's been great. We just talked about the Kuwait Finance House or whatever that was called yesterday. Then before that, the Georgia CBDC. Then after that one, the Dubai. It's been one big thing after another. I don't know how. I'm very satisfied with that. I'm very happy when I'm hearing about these partnerships. As a visionary, as a futurist, I'm looking at the long game. I'm playing the long game here. It's not about the short game for me when it comes to XRP. It's about the long game. XRP, XLM, to a stellar article. Okay. Now, this is coming. It's not an article, actually. It's actually from one of their videos. They did this massive stellar video dump, and I wish they wouldn't do that. Because, are they for the people? If they're for the people, how are the people going to watch? What was it, like 10, 11, 12 videos? And they're all very long. How are the people going to watch that to really stay up to date with what's going on with Stellar? And I'll tell you what, the Stellar audience, at least the one I used to know, because a lot of people have gone their own way, but they are very technical. They want to know the information about Stellar. But how do you get time to watch 10, 11, 12 videos? And a lot of them are like 30 minutes. You know what I mean? So anyway, it takes a lot to comb through those videos to find what's important, in my humble opinion. But this video here is titled How to Automated Market Makers. I guess they should have probably said how do. But it says how to automated market makers work with smart contracts on Soroban. And there's a little interesting tidbit here at around 3 minutes and 40 seconds. I'm going to read the transcript to you. OK, and it says this. Now, you make of it what you will. But let's keep this in mind. OK, and for future times. 3 minutes and 46 seconds. It says in general, and swap functionality, maybe we could start with liquidity. They're talking about things that could be problematic, right? With liquidity, which is a, big topic, has a lot of issues. It says, how do you incentivize liquidity and liquidity provision? I'll just throw that question at you. It says, it's a big question. Yeah, I'll take the first stab if that's all right. So I think the old school way of incentivizing liquidity. My apologies if I have to pause, but there's a lot of typos in this transcript. They do the automatic transcript on YouTube. So it's like a lot of words are wrong. Some of these words are not even words. So I'm trying to interpret some of those things. OK, but it says here, the old school way of incentivizing liquidity is just you have this, sort of farm token. And if you provide liquidity, let me scroll up. If you provide liquidity, you get these incentives. And initially it prints out these really high APRs. And then over time it goes down. So in other words, you have to hold something. It's not that different from XRPL automated market makers where you it's like you trade in your XRP for some other liquidity provider token. Right. Which means pretty much you're locking up that XRP. Pretty much you're locking it. That's what it seemed like to me, which means that if this was similar on Stellar, you would have to trade in your XLM or whatever it is they're trying to use for liquidity. I don't know why you would use something else other than XLM, since it has a good amount of liquidity and can generate a good amount of liquidity just by promoting it, just by saying, hey, you trading your XLM for liquidity provider tokens. There's a ton of people who are Stellar enthusiasts. So I don't know why you would use something else, but they could, I guess. But imagine a lot of that XLM not moving, right? And a lot of people getting in on that automated market maker aspect. And I mean, what would it do for the price if it was being utilized in that way? If, right? Big if. But let's keep going here. It says, it prints out these. Okay. It says, I think that may not be the best way to do things at this point. And I think also that how well that model works depends on where you are in the market, bear market versus bull market. That's a good point. Hold on. Give me one moment here. I'm trying to get this. When I scroll down on this, it just jumps up. Their transcript box here is very, very particular. It's very, very interesting, to say the least. Okay, bear market versus bull market. I think bull market, that's a little bit more sustainable. In the bear market, if you try something like that, people just start selling tokens. Well, yeah, but is that really? I don't know if that's a fair concern, because I mean, like, a lot of these foundations sell the tokens to fund everything that they do anyway. So that brings the price down, I would think. That brings volatility, I would think. So, you're concerned about the people, but you're not concerned about the companies that get funded by, the native protocol. But anyway, and you may say, well, they're not talking about the native protocol. Okay, let's go a little bit further. It says here, like that, people will start selling tokens. You have a lot of sell pressure. And then if that's your native token, so they are including native token as a possibility. What's the native token? It's XLM. XLM. It says, and then if that's your native token for your DEX or ecosystem, that's going to be quite ugly. I don't think it gets much uglier. Like, I don't think so. I mean, let's keep going. It says that's going to be quite ugly. I think the most ideal and idealistic answer would be there's enough utility. Now, this is where it gets interesting. There's enough utility. There's enough volume. There's enough participation in the ecosystem through various mechanisms. Now, in order for that to occur, they would have to push Stellar to the freaking moon. They would have to. I mean, look at where it is right now. For volume to go through the roof, for utility to go through the roof, they're going to have to push it everywhere. And I just don't see that happening as of now, unless they're going to push Stellar-based wallets everywhere. And that's not where we're at right now with offerings like MoneyGram. No, there has to be something that's more widespread. Like they said, if they can actualize on what they've been saying and become the protocol for retail and for the people, for a long time, everyone has looked at XLM as being the specifically retail. And yes, they do dominate when it comes to being retail specific. So, but they would have to have a wallet that can go everywhere for the regular people, to drive that volume and really promote that wallet. You can't be so segmented and fragmented. You got these obscure wallets over here and these obscure. No, there has to be something that you put your all behind, in my humble opinion, and push that everywhere. That's how I look at it. I do. I believe that. And that's where you're going to get a focus where you could actually ensure that so-called volume comes in, that utility is there. There has to be some kind of focus. There's just too much. So anyway, let's keep going on here. It says there's enough participation in the ecosystem. How do you ensure that? You're going to have to promote if you want participation. You're going to have to say, hey, these are companies building on Stellar. Hey, and really, really advertise for those companies, or have those companies advertise, or I don't know. The companies themselves have to decide, we're going to push these systems like what Stronghold does or BPV. No, there has to be a lot more pushing, in my humble opinion. The people can't use something if they don't know it exists. And the people, if they don't know it's good, they're not going to use it. And there's been so much FUD on the crypto industry that stink, that negativity has stuck. You get what I'm saying? So you have to begin that push, that fight, before the people will fully commit to utilizing something. It's not just Stellar. I think the same thing with Ripple. Ripple has a lot of good advertisements going on. I believe they have them right now in cities like New York. But That's going to have to be continuous. It's going to have to be more widespread than New York. I think that they are doing it in other places, but that's just a starting point. I'm not saying don't do it there. I'm saying that's a starting point because the people have to be inundated enough with the truth that these are the best systems, the best alternative to the legacy system, so that they can use it. Because a lot of people do not want to touch crypto. They think it's bad. They think it's scammy. They think it's grimy. So there's that battle as well. And it's better to get it started now, if you want that type of utility in volume, than to start it later. It's 100%. And that kind of volume and utility is not going to come through aid, United Nations aid, partnerships and such like that. That's great. That's great. But you want to be the people's coin. You want to move retail. OK, so we got to start putting in that footwork. That's how I look at it. Right. I'm serious business when it comes to this. It says here. Let me scroll up a little bit. I'm trying to go to 4 minutes and 49 seconds. There we go. This is where you have some value driving back into the token, whether it's a buyback. How many people made it to this part here? Now listen to this. Where you have some value driving back into the token, whether it's a buyback, or burn. Wait a minute. What are they talking about here? Or you collect certain fees, or you use it as some sort of participation for other cool perks, maybe NFTs, but it's going to just depend on a lot of factors. I think with that token incentivization, we're trying to create. They actually put the uhs in here. We're trying to create some utility. Our approach for liquidity at the Phoenix on Soroban is to take more B2B type. Wait, B2B? Wait a minute. You're dropping some gems here. B2B type approach. There's a lot of anchors. Those anchors, if you look at the list, they have mismatched currencies. Some anchors have BTC, XLM. Others have USDC and USDT, and some other ones, so on and so forth. What we're trying to do is connect with as many anchors as we can. Okay, my apologies. I'm trying to keep up with this thing. Every time I scroll down just a little bit, it jumps majorly. We're trying to connect with as many anchors as we can as on and off ramps. And then on the back end, if a user from one anchor wants to send money to a different anchor, it can go through our DEX. So it's going to be a more B2B. So now this is something where I always wonder, like, what? See, now this can be gone around if they just pay more attention and put everything in through XLM and use it how it's supposed to be used. It is a bridge currency. Run that stuff through XLM. Am I wrong in that? Right? This should not be an issue. I don't care if they have Bitcoin or USDT. Okay, USDT into XLM into BTC. That should be automatic. Automatic. Make that automatic. Is it automatic? You tell me. Then why are they saying this? It says volume driven type of incentive, and with a lot of volume, that's going to create APR through trading fees, and that's going to attract liquidity. So that's how we think about it here at Phoenix. Okay, so just this is their personal thoughts. I actually disagree with that completely. I don't think like incentivizing people with like farm tokens. Okay, somebody's disagreeing. It says, I don't think like incentivizing people with like farm tokens leads to any sort of longevity in any protocol. I think that's been like pretty proven at this point. I think how do you say that if the majority of the last 2 years, we've been in a bloody bear market and crypto is still in its nascent phase. We haven't even seen what crypto is going to be when it's fully mature and has mass adoption. So we don't even know what the liquidity is going to be at that time. So you're basing your thoughts on a time period that really will become irrelevant in when it as history goes on, as time goes on, if crypto isn't as successful as it's supposed to be. That's how I'm looking at it. Is it relevant now? Yes. Will it be relevant later? Maybe not. If everything is going to take off, if it's going to be much more successful, there's going to be a lot of big businesses taking over, a lot more capital moving. So therefore, the markets may not guarantee, may become more stable. I don't understand how you can make statements like this. So now this article here is from the dailyhodl.com and it's titled, "It's still early for Chainlink and one Ethereum rival as more rallies are up ahead." Now that's what I like to hear. You know, Chainlink, and I'm pretty sure they're talking about maybe Solana, are getting things done. It says it's still early for Chainlink and one Ethereum rival. Okay, we'll skip that part. They reiterate from the top. A widely followed crypto analyst says two surging altcoins are still in the early phases of their bull runs. We just read an article like this yesterday. It says, and predicts further rallies for them. I'm all for it. And I'm ready to have those gains. I really am. This is in a new video update. Pseudonymous crypto analyst The Flow Horse says that the decentralized Oracle provider Chainlink and the smart contract platform Solana are just beginning their uptrend. According to the trader, those who believe they have missed their opportunity to invest in Link are wrong. Quote, people are worried about buying Link because they feel they missed it. Yeah, I hear that a lot. I disagree, but yeah, I see where they're coming from though, because they didn't get it at that low and, you know, before it started taking off. It says, I think that between $11 and $8.50 is going to look like a rounding error if we're talking a year, 2 years into the future as the crypto market continues to grow. Link is trading for $12.56 at the time of writing. Moving on to Solana, I knew it was Solana they were talking about. The crypto trader says that Ethereum rival could reasonably double in price. Quote, you have Solana that is talking about itself as being a competitor to ETH or dethroning ETH. If you look at Solana, it's 30 times less the market cap of ETH. So even if the gap closes a little bit, we're looking at Solana doubling from here is reasonable without any kind of major changes in the market. Yeah, I'm super bullish on Solana. I can't wait. I love what they're doing. They've shocked me. 100% shocked me. And I think they're going to do big things in the future. So yeah, Solana is trading for $41.31 at the time of writing. Yeah, it's a beautiful thing. We're still up. A fractional decrease on the day, but a staggering 300% increase since the start of 2023. All right, so let's stop there. Let's move on to this article here. Bitcoin was having a little bit of problems. I like to keep up with this. A lot of people that are very close to me have some Bitcoin. I personally don't have Bitcoin, although I have used Bitcoin for different transactions. I like it for that. I do. So I'm hoping that they don't have any problems. This is from the cryptobasic.com, and it says Bitcoin network fails to produce block for more than an hour. What the heck is going on? Don't give them any reasons to go against you, Bitcoin. Don't do it. You know, these powers that quote unquote powers that be out here are looking for any reason to go after crypto. Don't give them one. The Bitcoin network failed to produce a new block over a 69-minute period on November the 7th. On-chain data reveals that it took approximately an hour and 9 minutes between the production of Bitcoin blocks. It says the delayed block time lasted between 16 minutes and 1647 and 1756 UTC plus 8 and preceded an earlier block, which also, oh, wow, also took 43 minutes to mine. But why? Tell me why it happened. As the data from Bitcoin.com shows, the Bitcoin mining firms Foundry and Antpool mined the delayed blocks. The delayed production time between blocks within the window catches the eye, given Bitcoin's average 10-minute block time. Yeah, it's never that long, you know. Additionally, Bitcoin's memory pool, mempool, from which miners pick transactions to confirm, has been relatively congested. Oh, okay, I see. Okay. All right, so there's a lot of activity happening. I see. All right, now this is making sense. With over 100,000 transactions pending confirmation at the time, the number of Bitcoin users has surged significantly with the BTC market rebound, thus creating additional demand. All right, well, then this should be able to be resolved quite easily, I would think. Although, I mean, are they going to need more miners? Is that possible? Are they going to? I mean, I don't know what's going on. I don't know what goes on with Bitcoin. I don't keep up with Bitcoin. I'm not going to claim that I do. I don't. Not as closely as I do like bank coins and utility coins, but hopefully this will all be good. I want to see Bitcoin do well. And I enjoy what Bitcoin does. I think it has its place. I definitely do. All right. So now let's move on here to another article. All right. Of course, we have more of The Fed, I love the Fed. They give so much content. This is from Fortune.com. Fed's Michael Barr. I told people they're going to be going after stablecoins. Told people this. They already indicated that over the last 2 years. They keep talking about it, and then they get quiet. They come back again, and here we are. Fed's Michael Barr calls for strong stablecoin regulation and says, quote, "We haven't made a decision," unquote, when it comes to CBDCs. So they have to throw that out there, right? They want people so badly to believe that they're not certain on CBDCs, even though they continue their massive work on CBDCs. But that's sort of to put you off from the fact that they're calling for stablecoin regulation. What does that entail? They want to take control of stablecoins 100%. And I don't think it would be that difficult since Circle and Coinbase, well, I won't say Coinbase, mostly Circle, right? They wanted to get close with the Federal Reserve. Remember, they wanted the Federal Reserve to hold their some of their capital, some of their cash or something like that. So I don't think that they would be opposed to that. I really don't. I think they would see that as a doorway into the club. You know what I mean? All right. So now I have an article here. I'm going to skip that one and post that for the members only section, which, by the way, if you didn't see those posts and you're in the members only section, make sure you're going over to the channel and checking for those posts. It's not just members only videos for those of you who are new. And that's your content, some of those posts. But there was a post yesterday that I made, and it's very relevant to the US dollar. Take a look at that post. I'll just say that. All right. And I'm going to post this next one here, which I think is pretty potent as well. There also for you to read. So now this article here we're going to close out with is from fxstreet.com, and it's titled "Gold Price Falls Further as US Dollar Yields Recover." I told you, I keep telling people this, and it's like they don't look at the DXY to see why markets got crushed. The strength of the dollar is a bad thing for a lot of risk assets. It is. So anyway, here it says, first bullet point. Let's skip the bullet points. Let's go to the article. Gold price recovers some losses while broader safe haven demand remains diminished amid no further escalation of geopolitical tensions. A recovery in the U.S. dollar. That's what happened yesterday. DXY went green. Everything went red. We might have a little bit of selling here and there. Okay, yeah, that adds to it as well. But mostly the DXY went green. Dollar got strong again. A recovery in the U.S. dollar and long-term bond yields would continue to weigh on the precious metal. Gold price weakens despite investors seeing an end to the Federal Reserve's rate tightening campaign due to gradually easing consumer inflation and higher treasury yields, which have tightened financial conditions significantly. Commentary from the Federal Reserve Chairman Jerome Powell on Wednesday could drive further action in the U.S. dollar and bond markets. Powell may give an idea on whether investors should expect more interest rate hikes this year to ensure a return of inflation to the Fed's 2% target. That's not going to happen. Fed Governor Lisa Cook, that's just my humble opinion, said that the current interest rate policy is sufficiently restrictive to achieve price stability on Monday. Fed's Kashkari, on the other hand, reportedly said the opposite in a Wall Street Journal article published on the same day. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.